5C combined your knowledge of 5A and 5B and asked you to prepare a report, and to do that you needed to remember the topics about perpetual inventory, preparing financial reports, and also the returns of stock. So you were given the stock card, and then it said prepare an extract of the income statement for the month ended of 31st of July 2015 up to and including adjusted gross profit. So the main thing you want to remember is just what these sections are. If you can remember that, all you're going to have to do is plonk in the numbers. So hopefully you remember that the first thing that will go in will be revenues. Then we'll less away any sales returns, and that'll give us what's called net sales. We'll take out the cost of goods sold, and that'll equal our gross profit. And then what we'll get is any stock gain or stock loss, we'll add or minus it, and that will equal our adjusted gross profit. So we don't need to go any further than that because the question says just go down to adjusted gross profit. So let's look at the first part, revenue. Where will I find revenues? Well, revenues will occur when we sell stock. So when we sell stock, we've got less of it. So they will be entries that are in the out column. So how do I know which ones? I've got all these choices here. Well, I know that it's either going to be a cash sale or a credit sale. So I'm looking for anything in the out column with either an invoice number or a receipt number. So take this transaction here, for example, it's in the out column, but it's a credit note number, so that's not going to be a sale. So what I've got is two cash sales there with receipt numbers. I've got a cost prices of $11.70 and $4.35, and I've got two credit sales there with invoice numbers for $12.60 and $1,080. If I total those up, I get $16.05 and $23.40, but that's the actual cost price. What I need to do is add in the markup. Now the question states, if you read it, all stock is marked up by 100% on cost. So we better add 100% to each of those numbers, and we'll get those numbers there, 3210 and 4680. So doing our income statement, we'll start with revenues, cash sales and credit sales, and a total of 7890. Now you don't actually need to split those up. If you just wanted to put one figure for sales, that's fine as well. The next section we need to remember will be less any sales returns. So before we get to cost of goods sold, we need to remember there could be sales returns. Now we actually sort of looked at this earlier and said when we were figuring out what a particular transaction was, what some items we want to look for. So we know we'll find sales returns in the in column because it's stock we're getting back. And we know that it must have a credit note number, so that's the only transaction that can be. There's got to be credit note 230. So there's a sales return of 85, but that's the cost price. So we would have given the customer a credit of the sale amount, which is another 100%. So the customer would have got a sales return of $170. So what we'll do is take the income statement we have so far, we'll take out the sales returns, and that'll give us net sales of $7,720. Next section will be a cost of goods sold. So we are going to do this the easy way. We could actually go through here. We know cost of sales will be in the out column. We know that when sales happen, it's either a receipt or an invoice. So that would be this one, this one, this one. We could do that, find every single one. What we might do that's a bit easier is we are told that if the total net sales is 7,720, we're told that all stock is marked up by 100%. So what we will do is figure out cost of sales as being half of that. So we're going to divide that number by 100%, and we'll get 3,860. And the beauty of doing it that way is that that will actually factor in the sales return, because that would actually decrease cost of sales. And what we're doing is just basically taking the overall total here, and just if we figure out that net sales are that, all we're going to do is divide it by 100%, and that'll give us a cost of sales of 3,860. The next section will be, we'll total that up and get a gross profit. So an easy one, we'll just take our net sales here and subtract away our cost of goods sold there, and that'll give us 3,860, which makes sense given that the markup was 100%. And finally, we'll have any stock gains or losses. Now we know that stock gains or losses will only happen on the last day of the period, so the only row we need to look through or for is this one. So we've got a memo, so it could be a stock gain or a stock loss. It's in the out column, so I'm losing stock, so that's got to be a stock loss. That's a stock loss of $85. So I better put that in. And then finally, that will give me my adjusted gross profit. So to get that, I will take my gross profit here, minus away my stock loss, and that will give me an adjusted gross profit of $3,775. Looking at the marks, there was one mark for the sales together, hence we said you could combine them if you want into one figure. Sales returns and net sales was 1. The cost of goods sold and gross profit together was 1, and finally the stock loss and the adjusted gross profit was 1 mark. How did the state do? Bit of trouble for 18% of the state. At the top end, 17% of the state got 17%, but you can see there's a pretty big middle here. Most kids could do some of it, but they had trouble with the, sort of last fourth out of fourth mark. So in particular, the examiner's comments were, remember the standard format for an income statement, so they're just the sections we went through, no other version is acceptable. And probably the main one would be forgetting the stock loss. It was actually mentioned in the previous question, you had to define and relate why a stock loss is an expense. So a lot of people just forgot that and forgot to put that in, and that would have explained why only 17% of the state got 4 out of 4.